Hello viewers, welcome back to the series Bhaskar's Insurance for You and Me. From this episode onwards, we will discuss few important aspects of motor insurance. This being a very vast subject, I will be focusing only on few important aspects about this line of insurance. We briefly touched upon the motor insurance earlier in our episode 4. Before we try understanding the motor vehicle insurance, it is important to know certain provisions of Motor Vehicles Act relating to insurance of motor vehicles. The current episode focuses on the provisions of Motor Vehicles Act which relate to motor vehicle insurance, otherwise referred as third-party liability insurance or Act-only insurance. We will discuss the Act provisions relating to what is a motor vehicle, need for third-party insurance, what is the cover provided under the insurance policy, what is the extent of coverage, etc. The Motor Vehicles Act 1988 was enacted in 1988 by consolidating and amending various laws pertaining to motor vehicles. The earlier versions of the Act were the Indian Motor Vehicles Act 1914 and the Motor Vehicles Act 1939. The Act of 1988 was effective from 1st July 1989 and has undergone many amendments subsequently. This Act, with its amendments, deals with definitions of motor vehicles, licensing of drivers, registration of motor vehicles, control of vehicles through permits, laws relating to traffic rules, offences, penalties, vehicle insurance, etc. The Motor Vehicle Act defines a motor vehicle as any mechanically propelled vehicle adapted for use upon roads, whether the power of propulsion is transmitted thereto from an external or internal source, and include a chassis to which a body has not been attached and a trailer. But it does not include a vehicle running upon fixed rails or a vehicle of a special type adapted for use only in a factory or in any other enclosed premises, or a vehicle having less than 4 wheels fitted with engine capacity of not exceeding 25 cubic centimeters. So in simple language, we may define a motor vehicle as a self-propelled vehicle, that is, which can move forward on its own force, designed to move on land, excluding those operating on rails, that is, rail vehicles, those adapted for use only in places other than public places, and vehicles with less than 4 wheels which have engine capacity less than 25 cc. Various types of vehicles which fall under this category of motor vehicle include private cars, two-wheelers, commercial vehicles for carrying goods or for carrying passengers, agricultural tractors, special type of vehicles like ambulances, bulldozers, cranes, excavators, etc., and electric vehicles including e-carts and e-rickshaws. So the term public place used in the above definition, it means a road, street, way, or other place, whether a thoroughfare or not, to which the public have a right of access, and includes any place or stand at which passengers are picked up or set down by a stage carriage. So vehicles like forklifts, which are used only in places like factories, which does not fall under the scope of public place as we defined earlier, is not considered as motor vehicle for the purpose of this Act. The Chapter 11 of the Motor Vehicles Act deals with mandatory insurance requirements for motor vehicles. As per these provisions, no person shall use or cause or allow any other person to use a motor vehicle in a public place unless there is an insurance policy in force complying with the provisions of Motor Vehicles Act. This is the specific section under Chapter 11 of the Motor Vehicles Act. This means that any vehicle owner, while using the vehicle or allowing anyone else to use the vehicle in a public place, must ensure that the vehicle is covered under an insurance policy, and the insurance policy must provide coverage as mandated in the Motor Vehicles Act. So what happens if the vehicle is not covered under such motor insurance policy? The Act specifies that whoever drives a motor vehicle or causes or allows a motor vehicle to be driven in contravention of the provisions of mandatory insurance, that is, without having the required compulsory insurance, they shall be punishable as under, that is, for the first offense with imprisonment, which may extend to 3 months, or with fine of 2000 rupees, or with both imprisonment and fine. And in case of subsequent offences, they shall be punishable with imprisonment for a term which may extend to 3 months, or with fine of 4000 rupees, or with both. So the penalty provision here is not dependent on the vehicle category or the value of the vehicle. So use of a motor vehicle, whether it is a scooter or a car or a commercial vehicle, without mandatory insurance is illegal, and the offense is punishable with imprisonment and financial penalty. What is to be noted here is that the penalty provision is applicable when an uninsured vehicle is used in public place. So mere usage of the vehicle in a public place without insurance attracts penalty. It is not dependent on whether the vehicle is involved in any accident or not. So when the vehicle is being driven, even without an accident, if there is no insurance, the person is subject to imprisonment or the penalty provisions as we have discussed earlier. So as indicated before, the cover under the insurance policy must be as specified in the Act. So what are the covers? The insurance policy shall cover the insured person, that is the policy holder, against any liability which may be incurred by him if the liability is caused by or arising out of the use of the motor vehicle in a public place in respect of the death of or bodily injury to any person, including owner of the goods or his authorized representative carried in the motor vehicle, or damage to any property of a third party, against the death of or bodily injury to any passenger of a transport vehicle. So these are all the liabilities which must be covered under the liability insurance policy. The liability against the passenger of a transport vehicle does not cover the gratuitous passengers of a goods vehicle. So the above coverage provided under the policy of insurance, it is referred as third party liability cover or act only insurance. So what is covered under motor liability only policies? The insurance policy must provide for covering the compensation which the insured is required to pay in respect of death or injury to third parties or passengers of a transport vehicle, and also towards any third party property damage, in case the loss is caused due to use of insured motor vehicle in a public place. In other words, by virtue of taking insurance for the vehicle against the third party liability, the vehicle owner, that is the insured person, is transferring his responsibility to pay compensation to the injured or deceased or the affected property owner to the insurance company. He is transferring his responsibility to pay compensation to the insurance company. Does the third party cover provide compensation for occupants of the vehicle? It may be noted that the term third party does not inherently include occupants of a private vehicle unless they are bona fide passengers for hire or reward. So occupants of a private car or a motorcycle, they are not considered as third party and are not eligible for the compensation as third parties, where the insurance cover is provided only for covering the liability as per the MV Act under Act only policies. However, in respect of comprehensive package policies issued to cover private car or two-wheelers, the insurers have specifically included the occupants as part of third parties, and hence only under the comprehensive package policies the third party compensation is extended to cover the occupants. So the distinction between what is act only policy and the package policy, that will be discussed in our later episodes. The next issue is on what is the insurance amount covered under liability insurance. So the monetary limit applicable for compensating the third parties under the insurance policy has undergone changes over a period of time. The limits are prescribed by central government in consultation with IRDAI. The current limits applicable are unlimited coverage for third-party liability. Though currently the insurance policies are being issued with a sublimit of rupees 7,50,000 for third-party property damages, that is only for property damage claims. The coverage for third-party property damage can further be sublimited to rupees 6,000 in case the insured wishes to reduce the insurance cover with some reduction in the premium payable. In other words, the coverage for third-party liabilities under the compulsory insurance is for unlimited amount. The term unlimited coverage for third-party injury claims needs to be understood carefully. The liability limit does not specify any limit on the number of accidents that are covered under the policy or even the number of persons who are covered per accident. So the liability of the vehicle owner towards third-party claimants continues irrespective of the number of persons affected in an accident or number of accidents the vehicle is involved during the period of insurance. So the potential losses that are covered under these policies can be very, very high. So in case there is such an accident involving injury to the third party, how is the amount of compensation payable to third parties decided? The amount of compensation awarded for a third party death or injury is mainly dependent on the nature of injury, that is whether it is death or minor injury or major injury, age of the person who met with an accident, income of the injured or the deceased as on the date of accident, number of dependents left behind by the deceased, the medical expenses incurred for treatment if any, the contributory negligence of the injured person if there was any contribution towards the accident. Hence, the compensation amount varies widely and can be really very high. We can see some of the examples of the compensation amounts awarded in the last couple of years to get an idea of how the compensation amount can be high and can vary. In one case, the accident involving a truck and a two-wheeler rider aged 24 years suffered major injuries leading to partial disability. The total compensation awarded by the courts, tribunals to the injured is rupees 46.36 lakhs. In another case, the accident involving a tempo and motorcycle, the motorcycle rider aged 30 years and earning a monthly salary of 50,000 rupees was killed in the accident. And the compensation awarded to the family of deceased was around 23.54 lakhs. Similarly, in a different case, the accident was due to a truck hitting a person walking on the road. The injured was aged 49 years and he died after being admitted in the hospital. And the total compensation awarded to the family of the deceased was rupees 1.18 crores. In a different case, the accident occurred when a car hit a group of persons walking on the road towards Shirdi. Two persons aged 19 years and 32 years died in the accident and 5 individuals injured. The total compensation awarded to all these families was 49.32 lakhs of rupees. So in another example, the accident was due to a car ramming into a motorcycle, and the motorcycle rider, aged 29 years, died in the accident, and the compensation to the family was 79.29 lakhs. So the next important aspect relating to the topic is the procedure for claims by the third parties. There are separate bodies known as motor accident claim tribunals, which are constituted by state governments for the purpose of deciding on the claims for compensation to third parties in respect of accidents arising out of use of motor vehicles. The persons who sustain injuries or loss of property in the motor vehicle accident or legal representative of the deceased in case of an accident resulting in death, they can make an application for compensation before these tribunals. The tribunals have all the powers of a civil court for the purpose of conducting the proceedings and also for enforcing the implementation of the awards. After hearing the parties concerned and the insurer, the tribunals make an award determining the amount of compensation and the interest that is required to be paid. The awards by the tribunal can be appealed against the awards before the high courts. And also, as per section 149 of the Motor Vehicles Act, the insurance company may receive information about the accident from the claimant directly or through accident information report from the police officer investigating the accident, and based on the same may make an offer for settlement of compensation to the claimant. If the claimant accepts the offer, the settlement may be recorded with the tribunal and the payment is made by the insurance company within 30 days of such recording. If the claimant rejects the offer, the tribunal will proceed to decide the case based on merits and pass award. So from the above details, it is clear that all motor vehicles which can be used in public places are to be mandatorily to be covered under an insurance policy providing cover for liability against third-party injuries and third-party property damages. The third-party liabilities that can result from accidents involving motor vehicles can be huge. Using the motor vehicles in public places without necessary insurance is a punishable offense. If the uninsured vehicle causes any third-party injuries, the liabilities to the extent of lakhs and crores could be fastened on the vehicle owners. So hence, complying with the Motor Vehicle Act requirement of insurance is very important. In fact, the data indicates that more than 50% of the vehicles on roads in India are plying uninsured. So these vehicle owners of the uninsured vehicles are running the risk of imprisonment and penalty, and also danger of need to pay huge compensation in case their vehicles meet with accident and cause third-party injuries, death, out of pocket. Because if there is no insurance, the compensation will be ultimately fastened onto the vehicle owner. So there is another provision in the Motor Vehicles Act which is not related to the third-party insurance which we discussed so far, applicable in respect of vehicles carrying or meant to carry dangerous or hazardous goods. Such vehicles which carry or meant to carry dangerous or hazardous goods are required to have another policy of insurance in force which meets the requirements as per Public Liability Insurance Act of 1991. However, we are not discussing about the Public Liability Insurance Act in the current video. We'll have a different episode on that topic later. So in this episode, we have discussed about the mandatory insurance requirements for use of motor vehicle in public place. Some other aspects relating to motor vehicle insurances will be discussed in our forthcoming episodes. Until then, bye from Bhaskar.